afternoon, everybody. Welcome to your Hump Day edition of TraderMerlin. We're going to talk all about materials today, thanks to a question from Scott. So, Scott, thank you very much for that one. And, of course, I'll be going through as many listener questions as I can on today's show, so feel free to send those on in. For those who might be new, you can send in questions directly in the chat by doing a couple question marks before, so I know which ones are directed at me, because a lot of times you got to get some great conversation going in the chat, but those aren't necessarily directed at me, just kind of the fun of the community. Anyway, hope you guys had a great day. Good to see you, Les. You were the first, as always. Walter, Ken, Thomasina, Big Eb, we've got Jerry, Catherine, good to see you live with us today, Lori and Randall as well. All right, so here is the show topic, hot material stocks. And we talked a little bit about this yesterday. The one I was trying to find was Martin Marietta. I just could not remember the ticker symbol for that one yesterday. But there are a lot of different segments within the materials space. And I thought it might be interesting for us to look at it, because if this is in fact going to be a big beneficiary of a $1+ trillion windfall of capital, which segment's going to do best? And when we lump it into things like infrastructure, what exactly are we talking about? Are we talking about the actual construction companies building the roads? Are we talking about the material companies supplying the steel, the wood, all the aggregates, the concrete? Are we talking about the chemicals that are making the polymers to put it together? I mean, a wide variety of different opportunities here to invest in. Now, I know we've got a bunch of international people here. It's probably not going to make much of a difference to you because you don't have an infrastructure bill like we do with $1 trillion pouring in. But from an investment perspective, the question I always ask when you see something like this is it too late, right? Are we a little bit too late to this party to jump on the train of some of these stocks? So that will be the focus of today's show. Again, I'll do as much as I can to have you guys share with me whatever you like. Let me go to this one here, which is hot material stocks. 811 is the show today. And it was from Scott. It says, can you look at material stocks? I know nothing about them. And I'll try to group these as much as I can today, Scott. I'm going to do my best to break it down kind of by sector. There is a lot to think about with these companies. Ironically, a lot of them aren't even in the United States I'll be covering today. They're kind of international and all over the place. So I'll start things off with basic materials. What I mean by basic materials, that's like your raw natural resources. Now, this isn't necessarily something that could exclusively benefit from an infrastructure bill, right? Certainly, we're seeing commodity prices swing wildly, so things like copper, gold, silver, platinum, palladium, even just extracting iron ore and even coal, these are commodities taken out of the ground by a few big players out there. So we'll start things off in that arena. And again, feel free to interact with me, talk, chat, whatever you guys want to know, send in questions. I'll do my best to get to them. So I dug up an old list. I'm hoping all these companies are still around, but this is one of my old watch lists I used to look at when I was watching building materials. It's funny, this actually came up during this watch list for building materials for me, came up in 2016 during the Trump-Clinton presidential run. Both of them were talking almost heavily about material stocks and how they were going to help with infrastructure. And of course, we could point fingers at whatever we want about what did or did not get done. Bottom line is, when you have both parties saying, hey, we want to improve infrastructure and we're going to get spending bills there, you think they would do rather well. So I actually built this watch list many, many moons ago. If you can't see it, let me know. I can probably copy and paste this watch list or export it to an Excel spreadsheet or something if you want to have this one. So we'll start things off with BHP. That's probably one of the biggest out there, and here is BHP. Now, I'll start off by just looking at the longer term charts, and then we will just give you a little brief intro into those companies and what they do, so you have an understanding of why it's on this list. BHP has got businesses all over the world, which is one of the main reasons they are one of the largest in the world. Really, 4 segments. You've got petroleum, copper, iron ore, and coal. Now, when we look at the infrastructure bill, am I really concerned with petroleum? Probably not so much. It's copper and iron ore that I'm interested in, and those are the companies I kind of wanted to focus on and put on this list. So, technically, if we look at what's going on with BHP right now, it's BHP Billiton, if you want to know the exact term. It doesn't look that great, to be honest. Mario says BHP, excellent managed company. Great. I guess this is really where you have to put on your, am I a trader or my investor hat, right? I'm pretty sure that within a year, if we look past a year down the road, that we will have some sort of infrastructure bill passed. And I don't know how much will be in there, but I'm pretty sure it's going to pass to some extent, depending on which politicians lobby and get their bills pushed in. Therefore, yes, I'm looking at it purely from that perspective and saying, okay, there could be this windfall of capital coming in, major projects across the United States. If you're like maybe Mario and saying it's got excellent management, that's great as well. I mean, knowing that level of detail and being able to track what management has done from a performance perspective would certainly add a little bit of extra comfort if you decided to buy into something like BHP. I'm just looking at it purely from technical and what they do. So if we look at this price chart, I'm not really that excited about it. I'll do the magic yellow box, which I seem to be doing quite regularly now. We may actually have to stop using TradeStation. They cut me off from some data feeds and they're trying to charge me a lot more, so I may actually stop using TradeStation here in the near future, but well, that's to be determined. So this is that sideways range we talked about. I could even go back a little bit further. Maybe make that range just slightly bigger. Yes, it is near the upper end of its range, but really it's been bouncing between $67 and $82 for the better part of 8-9 months. So not, to me, not the best. Yes, Jerry says 2,700 pages is hard to go through the noise, but try, Merlin. Yeah, I'm not going through all that stuff. I'm not even a big reader, not a fan. So if you're looking at BHP as a potential buy point or a potential buy, look at it. If this really was going to be a big beneficiary and do well because of infrastructure bill, it's certainly not showing it, in my opinion. I'll go back a little bit further here and we'll look at it from the 2020 crash where it sold all the way to sub 30. You know, I would argue that this is just a continuation trend, right? It had a beautiful trend going before that to those lows of 2015. Yeah, you had some big zigs, but it just feels like this trend is just a big continuation, and right now we're consolidating. So personally, I'd be looking at BHP as a potential buy down around that 67, 68 mark, which is the lower end of that yellow box, and if you can get above 82. Otherwise, you know, you're just kind of playing the sideways range-bound market. Now, somewhat in the similar situation as BHP, you have Rio Tinto. This is one of the world's leading mining companies based out of London. They're doing... I gotta remember all these numbers. I think Rio does iron ore, aluminum, and copper, and several other metals. But it's the iron ore and aluminum and copper, which is of interest for me with regards to Rio Tinto. Now, chart-wise, we'll do everyone the same. We'll start with the weekly to see the big picture here, which is what we have. I'll zoom out for a little bit. Yeah, Lisa, TradeStation is not very friendly. Unfortunately, they got bought by someone a few years ago, and it's really, really changed a lot. Unfortunate, because I've used them for so many years, but I'll go to whoever gives me the best platform and best service. So I'm happy to move, and hopefully CliK will be online here, and I'll be using CliK exclusively. All right, so those lows back we saw in 2020, obviously another huge run-up move, but again, it's been traversing sideways. Now, if we go to the daily, like we just did on BHP, this actually looks a little worse, and I think you guys can see why. It's still traversing sideways. It was making higher highs up until the 10th of May. That was when it peaked out, and now it's been slowly trending down. So as far as these two, they're both channeling sideways. Rio Tinto looks a little bit weaker, but they're both pretty much in the same basic space of mining around the world. Lisa says, do you look at ATR? Yes, absolutely. And it really depends on what we're doing, Lisa. If I'm mapping out a trade where I'm setting up my entry, stop losses, and price targets, you have to look at ATR. I mean, how do you set a stop loss without looking at ATR? Yes, you could use a demand zone or supply zone, depending if you're long or short, but how do I determine if that supply or demand zone is too much or too little for my specific stop loss? It's all revolves around ATR. So yes, I absolutely do look at ATR. All right, moving on down this list. So we looked at BHP, we looked at Rio Tinto. One of my favorite is more of a metals company, really. It's not like iron ore, they're copper, gold, silver, that type of thing. But that's FCX, Freeport-McMoRan. Looks a little bit better than Rio Tinto and BHP, simply from the perspective of it hasn't been channeling since the beginning of the year. It actually has been trending up, just like we saw with Rio Tinto. It is selling off a little bit over the past couple of months, but all in all, still looking rather strong, especially when you take a step back and look at this weekly chart when, I'm kicking myself for not just buying some FCX down at $4.80. I just really can't believe I did not buy that one. But the challenge for me is I'm looking at so many things. It's like the markets for me, it's almost like I'm holding a sieve in my hand and I can only catch a couple of things, and a lot of it ends up going through this strainer, and I miss a lot of these trades because Rio Tinto or Freeport-McMoRan is one that I've been trading and investing in for a long time, and how did I not buy it at $5? That's just crazy. Shame on me. All right, so we've gone through three. We've got the Freeport-McMoRan, BHP, and Rio Tinto. Those are the predominant players in natural resources. Now we can narrow it down a little more specifically and look at something like TX. TX is ternium. Ternium is kind of a steel manufacturer from all over the place. They're doing Mexico and Bolivia, basically all of South America and Central America is their nest where they're just dominating. And they do steel and mining. Now you look at this one. This one has just been blowing up, absolutely going gangbusters. Now, this one makes me a little more nervous simply because why do you want to buy something and chase it after such a monstrous run up? But from our lows that we saw in 2020, the pandemic lows where we reached at $10.19, it's currently trading at $56.19. One hell of a run. I know, Ryan. There's three things that exist, three words in this world of trading and investing that to me sum it all up. Should've, could've, and would've. These are three words I hear people say so many times. No, they mean absolutely nothing to me. If you say, oh, I should have bought it, I could have bought it, I would have bought it, you didn't, so shut up and move on. It's a done deal. If I could go back and say those words, shoulda, coulda, woulda, I'd be saying them thousands and thousands of times for so many of the trades that got away. Big F said, Merlin, I bought Freeport after one of your guests suggested it low at 20s. Good, brother. I'm glad. Freeport-McMoRan, man. I mean, that's a staple. That's just one of those companies that if you find a low enough price, just load it up and put some in your portfolio. I am definitely a fan of what they do. And I've never really dove into the management, but with some of the guests I've had on over the years, especially when John O'Donnell and I would do our weekend shows, he'd bring in a lot of gold and refining companies, and it was always one of the major talked about ones that everybody's holding. It's just a staple. Okay, let's keep going. So in that same vein, if you're looking at steel, obviously TX is one of the majors, that's ternium, and then the one that I like as well, which hasn't done as well, but still from a chart perspective looks great. This is US Steel. Now, U.S. Steel, as you can see those lows, same thing. Pandemic lows on U.S. Steel going back to the 20th of March. That hit a low of $4.54, and right now it's trading at $28.35. Looking a little bit closer, it's at a challenging spot right now. If you look at this price chart, right now it's actually at supply. It looks like that moment where you're like, oh, it looks like this thing might actually be selling off or hitting supply and selling off from that point. So not looking great with regards to a supply level right in front of us. But if you're trading a breakout trade, you get a close above, let's call it $28.50, maybe $29. You might see another big leg up here in U.S. Steel. And certainly when you look at TX versus X, which is U.S. Steel, my guess is that a lot of the politicians would much rather give the business to U.S. Steel because it's more American-made, etc. But that's just speculation at this point. But those are the two major components I see in the steel space. So we've gone from kind of metals and mining and copper and gold and ore and things like that down to the actual manufacturing of steel. Now, these aren't my two favorite plays. These aren't my favorite plays yet in this space. I'll get to those at the end of this list, but I want to keep on rolling through it. There is one more that you might want to pay attention to. It's CLF. Okay, so this is Cleveland Cliffs. It's another steel manufacturer. They're a major supplier of ore pellets and steel. So just another one to put on that list. And you can see they've also performed unbelievably well. If you zoom out here and go back to those pandemic lows where it was trading at a piddly little $2.98. It's currently at $25.75. So obviously the infrastructure plays since the pandemic lows have been doing unbelievable. And I know that some of you are holding those. I know Brendan, who was here just a minute ago, he's got those in his portfolio. He loves the natural resources and mainly metals. All right, what else do we have? I believe there was one that I skipped. Tech, which is Tech Resources Limited. This is basically another metals exploration. They're looking at steel making, copper, zinc, energy products as well. I want to throw this one in there. It's not, to me, one of the major players in this space, but I thought it was noteworthy. And again, I'm just trying to give you guys a broad spectrum of companies within different market segments in the material space. All right, so now we start to switch a little bit. As we look at the challenge of figuring out where to invest in metals or in precious metals, I have a couple of different things here to think about. Number one is I have to think about which segment do I prefer, and I still have a couple more segments to go here, but where do I think is going to reap the biggest reward? And I haven't really looked at the infrastructure bill in detail to see exactly where the money was going. I remember reading some of the major chunks were going to infrastructure, roads, bridges, and things like that. So right away, my inclination would be I'm looking at steel companies, I'm looking at aggregate companies, concrete, and things like that. Those would kind of be the main three that I'd be going for. But there might be a lot of other areas that are impacted in this as well. There's one even the wild card stock, which I'll mention here at the end. But let's keep on moving through this list. As you can see, I got a pretty big one. We're going to go next to CE. Now, this is where we start to get into chemicals, and the next few are going to be chemicals, polymers, and things like that. This is Celanese. I probably pronounced it incorrectly. They're just a global producer of chemicals and advanced materials. So a lot of these obviously are going to be used in the road making, right, in the manufacturing the roads and helping out with a lot of the major construction projects. They do, if I remember, it's acetate and vinyl and engineered polymers is what CE does. Technically, how does it look? Well, let's look at that weekly time frame. Same beautiful picture that just about everything has. I guess I could map out those, but I'll just go over to the daily because the trends are obviously up for all of them since those pandemic lows. What I like about CE right now is it's got a nice trend. It even has like a micro trend. It's really started about a month ago where it's been making higher lows, and now it's going to breakout run on increasing volume. The only challenge I see for Celanese is you have a 170 price target there, and it's had difficulty going above that level. You can see just in April it hit it, May it hit it, in June it hit it, and now we're here in July rallying back up towards it. So not clear skies for CE. Again, I think all of these are relatively long in the tooth given how much they've moved from those pandemic lows, which is why it's important to look at things like the monthly or weekly time frames. What else? So here is one. This is New Market. New Market it really looks like the weakest one of the bunch, but it may actually have tremendous opportunity. Why? They basically provide products to refiners and other companies that sell petroleum. So as the infrastructure bill goes through, or if the infrastructure bill goes through, obviously a lot of the petroleum manufacturing companies are going to be ramping up production because growth and infrastructure usually is going to use a lot of petroleum products, and New Market contributes to that space. So technically, I actually like this one now. I didn't like it as of 2 weeks ago, but I like it now. Why? Because all of a sudden you see this pop up. It's starting to make higher highs. And the good thing about what's interesting about this is not necessarily good. It just makes me a little raise the eyebrow, if you will. Look at the volume at the bottom, right? New Market Corporation doesn't trade very much. Okay, it's very thinly traded. You have 40,000 shares traded per day, so not that exciting here with regards to volume or liquidity. But it's made a huge move over the past couple of weeks on relatively low volume. So if volume does start to kick up and people start chasing this, then all of a sudden you might see some really big moves. The most logical target I see right now is right around 385 to 390 on this price chart, but looking good. The weekly, it does not look good, right? This thing just feels like it's just been a dog, but maybe this is that return to prosperity for New Market Corporation. Okay, Big Eb says, thoughts on CRH? I have a sizable portion of it as I used to work for them. All-time highs today, and I can't trail stop on Fidelity. Well, you can't trail stop on Fidelity? Really? Gosh, it's one of those things like if you can't trail stop, move your account, right? Let's go CRH. All right, so CRH. Boy, that's a really tough one, Big Eb. Why? Because you're right at all-time highs. I think you actually broke all-time highs today. Let me just verify that. Your high on the 8th of June was 53.26. 53.28 the day before, and today we broke that. So you are officially at an all-time high today at 53.38. Let me go to a monthly just to see where we are in the grand scheme of things. Ooh, oh boy. Right into a massive double top that goes all the way back into 2007. I know it sounds stupid, but that high back in 2007 was 53.24, and you just hit it today at 53.38. Boy, oh man, this is that's the $1 million question, is it not, Big Eb? Interesting. I personally would be happy selling half because you're right at all-time highs. Not only just recently, the highs from May, but you're also to the highs from 2017. So it's like this colossal triple top you're forming. Now, not to say it can't break and rip up higher, but if you got some money, it's complicated to sell. Well, I guess it all depends on, is it worth the effort for you? I personally would just sell half because I'm always one to be happy taking a profit. And if it makes more money, oh well, I'll live with that. But if all of a sudden this thing hits that double top and comes ripping back down and you find yourself down at 40, 30, somewhere in that area, you're going to be kicking yourself. So I personally would just lighten my position a little bit just to know I'm locking in profits. That's just my 2 cents out there, but take it for what it's worth. If it's really challenging for you, maybe you want to keep it. Maybe you sell some calls against it at a much higher price and collect premium that way. So there's definitely different things you can be doing with your CRH. All right, Tom says, I trail stop Fidelity IRA, use a lot with FNG. Yeah, I'm pretty sure that all platforms allow, just about every platform allows you to do trail stops out there. All right, so we were on new markets. Next one, not one that's major. It's called Element Solutions, ESI. Certainly, it's got more volume, but I noticed over the past couple of months, it hasn't done much, right? It's really just been stuck sideways, although it's been on a beautiful run, as everything has. So to me, this is another chemical company. They basically do finishing surfaces and packaging and offshore oil production, drilling. Their products are using communications infrastructure, automobiles. They're pretty extensive in what they get into, and at a price $23.70 might not be too bad. Now we'll go to a monthly here just to see the big picture. This definitely changes perspectives of things, right? You talk about things getting a little long in the tooth, a little bit overheated. Well, at this point right now, it looks like this one's way overextended, right? I mean, given your history, this goes all the way back into 2014. Now we're coming back to those all-time highs. It looks good. What I would say is if you're interested in ESI, throw some lines around this and basically use that as your guidelines for making transactions here. 22 might be a decent buy point, or a breakout trade getting above that high, which is roughly, let me look at that number for you, right around 24.75 would be the breakout trade of that zone. CG said, Merlin, do you think Workhorse is going to test the lows of 8 or 7 before it heads back up towards double digits? If it heads back up towards double digits? WKHS. I mean, right now, you know my phrase. The trend is your friend to the bend at the end. So to me, I would say it's probably going to hit that $8 mark. It just looks like it's trending down. You said till it heads up and hits that double digits. Well, it's at 980. So my guess is you'll probably hit double digits before you hit 8. But that's like maybe going back up to $10 and a couple cents and continuing this trend. So whatever's going on with Workhorse, it really broke right around the end of June, and it's been just nothing but selling off. So you're seeing the average daily volume is way lower than normal, which means to me lack of interest. So maybe some institution got out of this bad boy, pulled the plug and said, hey, I'm done with it, we're moving on. That's what I think is happening here, but it doesn't look good. It's a pretty ugly picture, kind of just drifting lower and lower and lower and lower and lower. So I'd be more inclined to think this is going to hit $8. Workhorse may be a great company, but right now it's out of favor for whatever reason. All right, more infrastructure. Let's keep going. This is probably one of the more popular ones, and there's so many people who are really big on this one. This is Lyondell Basel. I always pronounce that one wrong. Lyondell Basel, LYB is the ticker symbol. Been beautiful over the past past month. That said, I'll look at the monthly just to give the big picture. You see some pretty wild swings in this bad boy. Now, what do? They're one of the largest in the world in plastic chemicals and refineries for chemicals, or refining of chemicals. So they're a huge player. Yes, they're out of the Netherlands, but they still are a massive, massive player in the chemical and plastic space. So thought that might be one of interest as well. I'm almost done. I know you guys probably want to get into something else, but I'm just kind of running through our list here. Next, we've got CX. These next two are probably my two favorites on the list. Here's why they're my favorites on the list. I believe that the infrastructure bill is going to be really focusing on roads and improvement of roads. Now, that said, CX is basically cement aggregates, right? All the stone made for cements, even there's aggregate pieces that can be going into asphalt. So that's going to be in demand in a big way, I believe. So the question you have to ask yourself is, gee, what about when it was trading at $2 back in 2020? Now all of a sudden it's trading at $8. Is there more room for this thing to move to the upside? And you look at the long-term picture, yeah, there certainly is. And back in 2007, this thing was over 25. But we were in a building boom back then. Well, given the amount of money coming in, we may be in another building boom here. So CX is certainly one of my favorites. I'm a little skeptical about buying into it right now. I'll show you here on the daily so you can see, again, just sideways action. And I think, you bust out the yellow box again and you just say, there's my range. If I can get a close outside of this range, I might be interested. And I'm gonna cheat a little bit here and make the box look like that. I'm taking off two tiny little tails here, but basically if I can get outside of that yellow box, then maybe I'm interested in a long on CX. Right now I'm just gonna hold because it has moved up a lot. Right? At least that monthly chart was incredible, right? This is the one you dream about holding. I mean, this is like talking about knocking out of the park. You haven't had a red candle. It's the 3 months in a row of red candles. Before that, you had like, 13, 14 candles in a row that were all green. That is what you're dreaming about in your retirement accounts and long-term holds. Competing with them, with CMAX, is MLM. Now, this is Martin Marietta Materials. Again, Martin Marietta Materials is in the concrete space, right? These guys are aggregates, they're building materials, really catering towards the big commercial projects, which I think will be the biggest beneficiary of this upcoming build. Now, this is also a monthly chart, and you can see, it's funny, it doesn't look like it's an amazing chart, but really, if you look at the price axis here and see where we bottomed out in 2020, we hit a low of 135, and we're at 390 right now. This thing has just gone parabolic. Now, looking at the trend that started back in 2011, I would make the argument that it looks to me like we're going to have a pullback because you have this up wave, down, big up wave, down, big up wave. Now you might see that next big down move. So as bullish as I am on MLM, I'd be a little cautious here. I think you want to not be chasing something and looking at those all-time highs. And when you look at the big picture like this, it makes it a little bit clearer how dangerous this one might be. It recently just broke through on this daily through a level for a breakout trade. So it looks good technically. It just makes me a little bit nervous jumping on something that's so overbought. CMX and MLM will benefit in every part of this true infrastructure. But yes, exactly, Vega. That's why these would be my two favorites. I'm a little nervous that we're a little late to the party, right? What do I have down here at the M? EMN. I'm trying to remember EMN. Oh, Merlin, come on. I believe this is Element Solutions. Oh, no, Eastman Co. Oh, no, God. Get rid of Eastman Chemical. All right, we'll talk about Eastman Chemical. Eastman Chemical is just another chemical company. I should have put those back up near the top when we were talking about Celanese and New Market. Yeah, there we go. So I'll leave it at that. If you want to play this segment as a whole, though, probably the best thing is to look at XLB. We've looked at a lot of different things here, and I wanted just to kind of touch on all the different areas because there is so much opportunity. Right now, you're looking at a pretty lofty price for XLB, $86. I'll start things off on the monthly so we can see where it's at. This is why you've seen almost every company I've looked at have such great moves. The entire ETF is up over 100% in a little over a year. Trend-wise, I think we can all see going back even to 2000, there's a beautiful uptrend. And it does feel like we're due for a pullback to come back down to some level of normalcy here with XLB. That might be $70. So a lot of options, a lot of opportunity out there. If you want this list, you can email me at TraderMerlin@gmail.com. It's there. I can copy this out for you, and you can paste it into one of your whatever software platform you're using. Normally you can import Excel spreadsheets and things like that. But I wanted to do something just to talk about the opportunities in this space. Again, you've got chemicals, you've got raw natural resources, and for me, probably the biggest beneficiary, as Big Eb agrees with, aggregates, concrete, road building things, asphalt manufacturers. And again, some of these companies that I mentioned, they are making the polymers, et cetera, that are going to help be the adhesive products for the aggregate products that they make asphalt out of. So lots of opportunity out there, and just I think a lot of great potential trades. Just be careful that you don't jump on something that's run too much because of this anticipation of a infrastructure bill going through. Man, that was a long one. All right, what else do I got? Questions from you guys? We got Workhorse. Coinbase looking good now. Especially after their earnings. Coinbase, their earnings were great. I think I brought those up for you guys yesterday. I'll bring up your daily chart here. Here is Coinbase. You had that breakout, right? We had that 250 line, which was their initial IPO, supposed to be their IPO price. For those who don't know the charts here, I've got the 250 is what they said we should be paying for the IPO. 380 and change is what it actually came out at. So We're obviously way off. There's still there's thousands of retail investors who are underwater still by over $100 per share on Coinbase because they got filled on the open at $380.97. Gotta bless financial institutions, huh? Gotta love them. Is it looking good right now? Yeah, I think it's looking better. I think that this got too much hype. I personally would wait. We talked about a SPAC going on with eToro. I'm going to see if there's some way I can get in on the Kraken IPO that's going to be happening next year. I mean, I don't really have many connections in the space, but I would love to get a part of that IPO. I think that that'll be one of the better ones for 2022. But sure, if you like this one, it's definitely showing strength. If you look over the past 6 months, really since mid-May, it's been making higher lows and higher highs. Then you had the breakout, and things are moving to the upside. So all in all, yeah, it's looking pretty good, and their numbers have just been off the charts. Lisa says, I read that the crypto thieves are returning the coins. I mentioned in yesterday's show in building up this crypto course, one of the big red flags for anything to do with decentralized finance, right? This whole ecosystem of DeFi is built around smart contracts. And just because they're called smart contracts doesn't mean the person that wrote them is smart. There was some glaringly obvious problems in the smart contract, in the protocol that the company was using. And somebody just saw it, exploited it, and basically what happened was, I'll try to keep it in a very layman's terms, but they just basically convinced the code that they had the authorization to get all the private keys, and the smart contract said, oh, okay, well, you've shown me what I need to see, so here's all the private keys to these addresses. Boom, could take them out instantly. The sad part is, if this person does return everything, which they probably should, they should actually get a reward because they exploited something and they acted in good faith. Unfortunately, they'll probably get arrested and they'll get to prison for it. It's kind of crazy. But yeah, it's nice to see that somebody actually returning some of it. And I think it's partly because he doesn't have a choice. What are you going to do with it? The miners have been asked to block these different addresses. So you can go, if you're an Ethereum miner, and you can, as a group, say, you know what, this address, no transactions can move from this address. So you basically blacklist it, and no matter what that guy tries to do with it, he could try to send it from wallet to wallet. If it can't go through the network and become validated, it cannot move. So you can literally prevent that money from going anywhere, which is what they should do with any hijacking or theft. There should be some kind of automatic feature where they block that stuff out. But yes, they returned. I think they returned, a little over 5 million, and they stole 611. So, ooh, you're so generous. Wait till it's all returned. Yeah, Jerry says, don't worry, Merlin. They will get a job with the FBI. You know what? Good. Give him a job with the FBI. This guy found something that I actually was following a guy on Twitter, and he wrote like this 30-page thing on exactly step-by-step what this guy did. And it was scary because I'm thinking, man, if you identify this and you now have said step by step how to do this, how to exploit this problem, anybody in the future could potentially do this. But coding is way beyond my understanding. I've always been fascinated by it because I just don't get it. I took Fortran when I was in college studying engineering, and let's just say I didn't do very well. It's all ones and zeros. How can you screw up? I did not do well. Coding is not my thing. Catherine says, what about companies like Caterpillar or John Deere? Yes. I think that those companies should also be doing well because, if you're building roads and infrastructure, there's already a lot of equipment out there. But from my understanding, the last year or so, there hasn't been much purchases of this equipment. So now all of a sudden they might need to buy new equipment. Well, let's look at DE. Here's John Deere. They're obviously doing great. You see a great move up in John Deere in the past couple of months. Looked like it hesitated a little bit, but the trend right now is real strong. And again, these last few days have been because of that infrastructure bill. You look at Caterpillar, not as good, but certainly a blowout day today. I mean, you had twice normal volume, big move to the upside, broke through some intermediate supply zones or shorter term supply zones. Now to me, it's going to be a race and a charge back up to those all-time highs on Caterpillar and John Deere and other companies. Kubota, Volvo as well has a heavy equipment arm. So there's definitely plays there. The challenge is, again, finding which one is the right one for you. Which one do you think is going to reap the benefits the most? And if this doesn't pass, maybe some of these might represent some great shorting opportunities because I believe this is definitely a buy the rumor, sell the news type of environment with material stocks. All right, what else do I have? CRH Global Building Company, that's why I asked. Oh, yeah? I didn't know the market cap of that one, but that's pretty good. If you manage to get into Kraken before IPO, brother, I will do my best. I'll see what I can do. You know, it's going to be tough to get in there. All right, I did not talk about some of the more important things today, which I wanted to do. The big numbers that happened today, and unfortunately I can't pull up my normal charts. Well, I might have to just do this on ETFs. Let me see over here. So here is, it's funny because I have access to the S&P futures, the Russell. Apparently I've been cut off of crude oil, gold, and the 10-year, which sucks because I like to look at crude oil and gold all the time. But today you can tell these indexes. I'll go zoom in a little bit here so we can see the kind of more spread out. There's your S&P, all-time high again. Russell 2000, still inside that yellow box, so really nothing noteworthy for me from Russell 2000. And then here's your NASDAQ, which is showing just a little bit of weakness, but really none of this looks really bad. None of it looks really, really bad. Looks good on the index front, so again, it's still holding. Crypto has been doing very well. For anybody who's holding long crypto, you've seen in the past month just monstrous moves in almost all cryptos. For those of us like Chris, who's holding Cardano, as well as myself, Cardano has been on the move. Polkadot's been doing really well, so yeah. That's your major stuff. So let's see. XLI holds Caterpillar and others like that. Yeah, industrials. Yes, you would think so. I don't know for a fact there, but I'm pretty sure they would. Why would they cut me off, Walter? Because they keep saying I'm a professional, and I refuse to admit that I'm a professional. You know, I'm not selling data. I'm not selling anything. I'm just showing pictures of charts. And what's nice is, you know, a company like TradingView or some other companies out there, they don't have a problem with me showing charts. TradeStation is just, I don't know, overly controlled, kind of an annoyance, actually, in my opinion. But they want to make sure that anything you show, they get cut of the action. Yes, they have been very lovely lately. All right, so the numbers I wanted to bring up here, and I think I had the charts because I didn't get a chance to capture all those images. We will bring this up here. Okay, cool. I have it all set for you. I want to bring up this one because this shocked the hell out of me. I did not expect this to happen. You can see here we've got Consumer Price Index. So the CPI data, I'll zoom in a little bit so you guys maybe have a clearer shot. CPI data was critical. The previous reading was 0.9 for CPI, both for the core and for regular CPI. CPI came out at 0.5, which was the expectation, which kind of surprises me because you look at this chart, that trend was just rising and rising and rising. So it's a great sign for the people who are saying that inflation is a joke and not really that big of a deal. Well, it maybe, you know, starts to drift down here. What was even more noteworthy was when you look at the core CPI, it dropped from 0.9 to 0.3, exceeding expectations. And this core takes out food and energy. So that's actually a pretty good sign if you take out the two most volatile components, and it looks like inflation is even better than much better than expected, and we're pretty much back down to a normal level, which is surprising. But to me, tomorrow is a very similar day where we have PPI numbers tomorrow. I'll show you here's tomorrow's stuff. Go calendar, and I'll show you what's happened on Thursday. There's your PPI numbers. Now, given the fact that CPI dropped so significantly, my assumption would be that you're probably going to see those numbers come out in line with expectations, meaning PPI at 0.6, core PPI maybe at 0.4, maybe a little less. You also have unemployment claims coming out tomorrow. Those are expected to drop 10,000, so no major stuff expected on the unemployment claims numbers. But you also have natural gas storage, mortgage delinquencies. That's all coming out on tomorrow's action. And as far as earnings go, you've got Disney, Baidu, and Canadian Solar reporting earnings tomorrow, and that pretty much wraps it up for the economic front and earnings calendar information. Any last minute questions you guys want me to go over before I jump ship here today? Let's see. TradeStation is doing that to other OTA students as well. Yeah, it's just unfortunate. They have the potential to be one of the top trading platforms out there, but they just keep shooting themselves in the foot by being way overly strict. Patrick, have you ever heard of McDonald's doing some crazy manipulation in the past month or so? McDonald's? No, haven't. Let's see. Someone brought up the balance sheets of McDonald's and the numbers don't make any sense. Yeah, well, look, they make sense to somebody's accountant, that's for sure. That I don't know. I don't know. My assumption is CPI numbers are fake. Yes. They're manipulated to a point. And it's like I say, we interviewed a guy who worked for the Bureau of Labor Statistics, and he actually said, yes, we do tailor those numbers, was the word that he used, to fit different political agendas. So right now they need they need the inflation numbers to look lower because all of a sudden people are starting to freak out about it. So my guess is they're manipulating that data down. My prep screen, Tyler, I didn't really have a prep screen. Basically, I just was showing this show was based off of a question that came in from a gentleman named Scott, which was this question here, which is, can you look at material stocks? I know nothing about them, and this was my prep cream. Missing Sam here? Yeah, was he supposed? I thought he was supposed to be on tomorrow. I think I may have screwed up, but I thought he was supposed to be on the show tomorrow. Maybe I did mess up. Maybe he told me Wednesday. I could swear he said Thursday, but I may have messed up. Any comments on stockability? No, that's not nothing that I can say there. We'll have Mr. Evans on the program. We'll talk about trading, but yes, no comments on stockability. Yes, he is awesome. He's good. It's unfortunate that as we go through life, you could be the greatest person on earth, but every now and again you end up hooking up with somebody who is, one of the scums of life. And unfortunately that may have happened, and unfortunately it happens to all of us at some point. Hopefully it's just somebody that you met and you have an acquaintance and they wrong you some way and you can just push them away. It's much more difficult when you have monetary or business interests in mind. So, who knows? It's unfortunate. Yeah, no, SS Randall, no, that guy can just disappear. Goodbye, good riddance, SS. I hope you just disappear, fall off the face of the planet, and nobody hears from you again. That's what the world deserves. But Mr. Evans, no, we deserve to hear more from Sam. So I'll wrap things up. I'm pretty sure he was supposed to be the guest for the show tomorrow. That's Sam Evans, and hopefully we will have a conversation about markets. Maybe you can bring up whatever you guys like on tomorrow's show. Of course, you guys know what to do. Scott, thank you for the infrastructure comment. Kind of gave me a roadmap for today's show. I hope you guys liked it. I think it was, a little basic, but also somewhat informative to look at the variety of different sectors and market segments and how they might potentially have a place in your portfolio. I feel at this point you're probably a little late to that party, but it could continue to keep on moving, especially if this finally does go through. I would recommend, if you really are thinking about it, look at the infrastructure bill and see which area is going to get the most money. Again, I'll check, but I'm pretty sure it's bridges and roads. I love blocking numbers on my phone and keep those calls from going. Yeah. Jerry, Samway Evans was your favorite? It's because I didn't do any XLTs. That's why. If I was doing XLTs, different story. Anyway, just kidding. All right, everybody. Well, that's going to do... it's not even a comparison, Chris. Evans is so much better than SS. There's no comparison whatsoever. Because Evans actually trades. Evans actually trades. So that's a big difference in somebody who says they trade and someone who does trade. Big difference. All right, that's going to do it, guys. I've had fun today. I was not sure how this one would go, but that's our material stock show for today. Tomorrow, fingers crossed, we'll have Sam Evans on the program. If you have something you want us to talk about, send it on in, TraderMerlin@gmail.com. Very easy to do. You just email me there, and I'll hopefully get to him on the show. You can also put it down below the video on our YouTube channel. If you like the show, thumbs up, share it, subscribe to the channel if you're new. Until then, happy trading, everybody. I will see you tomorrow. Take care.